Good day Forex trader. Your USD Forex signal, HNS points to bearish breakout ahead of FOMC. There is a likelihood that the pair will keep falling as bears target the next support at 1.0800. Bearish view. Sell the Euro USD pair and set a take profit at 1.0800. Add a stop loss at 1.1070. Timeline, 1 day. Bullish view. Set a buy stop at 1.1035 and a take profit at 1.1125. Add a stop loss at 1.0870. The Euro USD pair retreated in the overnight session ahead of the upcoming US retail sales and the Federal Reserve decision. It dropped to a low of 1.0940, which was about 1.65% below the highest level last week. US retail sales and FOMC decision. The two main catalysts for the Euro USD will be the upcoming US retail sales data and the Fed decision. Analysts expect the data to show that retail sales rose by 0.4% in February after rising by 3.8% in the previous month. At the same time, they expect that the core retail sales that exclude the volatile food and energy products declined from 3.3% in January to 0.9%. This decline will likely be because of the rising cost of products. The US will also publish the latest import and export price index data. Economists expect that export prices rose to 1.6% while import prices rose to 1.5%. The next major catalyst will be the upcoming interest rate decision. Analysts expect that the Federal Reserve will start hiking interest rates for the first time since 2018. The rate hike will be necessary to curb the rising inflation. Data published by the Bureau of Labor Statistics, BLS, showed that the country's inflation rose to 7.9% in February, which was the highest level in over 40 years. The core CPI also rose by 6.4%, which was the highest point in decades. In recent congressional testimony, Jerome Powell hinted that the Fed will implement a 0.25% interest rate hike. Still, some analysts expect that the bank could deliver a 0.5% rate hike since his statement came before the bank. The biggest challenge the Fed faces is on how to hike interest rates without hurting the economic recovery. Euro USD forecast. The 4-hour chart shows that the Euro USD has been in a strong bearish trend in the past few days. It has moved slightly below the key resistance level at 1.1123, which was the highest level last week. It has also dropped below the 25-day and 50-day moving averages while the MACD has moved below the neutral level. A closer look also reveals that it has formed a head and shoulders, HNS, pattern. Therefore, there is a likelihood that the pair will keep falling as bears target the next support at 1.0800. GBP USD Forex signal, found a floor at $1.3000. Today's GBP USD signals. Risk 0.75%. Trades must be taken before 5 p.m. London time today. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.3000. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 25 pips in profit. Take off 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to run. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.3141 or $1.3195. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 25 pips in profit. Take off 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. GBP USD analysis. I wrote on Tuesday last week that with the price falling firmly to a new 15-month low, along with the EUR-USD currency pair, it was hard to see an up day. I expected a down day or a period of consolidation, with the best opportunity likely to be a short trade from $1.3141. This was a good call, as the price made a bearish consolidation capped by the resistance at $1.3141, although the price fell little from there and eventually went on to break above that level temporarily on the next day. The price then fell again to new 15-month lows but found support on Monday and Tuesday at the psychologically huge round number at $1.3000. The hourly chart below shows this has begun to look like a bullish reversal, as we have clearly seen higher highs and higher lows since that level was touched. Conditions are still in favor of a strong US dollar, although the currency paused its general advance yesterday, and it is unclear how the market will react to whatever the FOMC does later today. Some analysts think the US dollar has made a short-term peak and will sell off after the expected rate hike of 0.25% if there are no major surprises. If so, this suggests we may see a meaningful rise from here despite the long-term bearish trend. I think the best approach today, which probably had low odds of success but a high potential risk-reward ratio, would be to look for a long trade close to or at a retracement back to the support level at $1.3000. AUD-USD Forex signal, bearish flag signals further weakness. Due to the bearish flag pattern, there is a likelihood that the pair will continue falling in the near term. Bearish view. Sell the AUD-USD pair and set a take profit at 0.7100. Add a stop loss at 0.7270. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7240 and a take profit at 0.7350. Add a stop loss at 0.7150. The AUD-USD pair held steady on Wednesday morning as the market reflected on the latest RBA minutes and the upcoming Federal Reserve decision. It is trading at 0.7200, which was slightly above this week's low of 0.7175. Fed decision and RBA minutes. The RBA published minutes of the latest meeting on Tuesday morning. The minutes showed that the bank's officials are still concerned about the impact of the ongoing crisis in Ukraine. They expect that it will push consumer and producer prices significantly high, which could have an impact on the economy. Still, the members were concerned about hiking interest rates and hinted that they will only hike when real inflation is sufficiently above 2 to 3%. The pair is also reacting to the ongoing COVID wave in China. In the past few days, many Chinese cities have been announcing a surge in the number of cases in the country. As a result, they have announced lockdowns affecting over 51 million people. This is an important thing for Australia because of the vast resources it sells to China. The biggest catalyst for the AUD-USD pair on Wednesday will be the interest rate decision by the Federal Reserve. Based on the past statement by Jerome Powell, analysts expect that the bank will deliver a 0.25% interest rate hike. Still, some economists expect that the bank will hike rates by about 0.5% because of the ongoing inflationary trends. For example, data published last week showed that the headline Consumer Price Index, CPI, rose to 7.9% in February. And on Tuesday, data revealed that the Producer Price Index remains at elevated levels. In addition to the initial rate hike, the pair will react to the dot plot, which will provide hints about the number of rate hikes expected this year. AUD-USD forecast. The AUD-USD pair has been in a narrow range in the past 2 days. It is trading at 0.7200, which is about 3.3% below the highest level this year. On the 4-hour chart, the pair has moved below the key support level of 0.7315, which was the highest level on January 13. The pair has moved below the 25-day and 50-day moving averages, while the MACD indicator has moved below the neutral line. Therefore, due to the bearish flag pattern, there is a likelihood that the pair will continue falling in the near term. This will likely see it drop to the key support at 0.7100.